Welcome back. Welcome back to everyone. I'm glad you can join us today. My name is Anthony Citrolo, and you've joined our podcast, which is Firm Grasp on an Empty Bag. Just a couple of opening comments, and then I'll get to my special guest, my good friend Dominick Bencivenga. As everyone knows, we are in, I guess, interesting times. A lot of owners are looking to sell their company. We have conditions of rising interest rates. We have suspicious maybe economy in terms of what is going on. Interestingly enough, there still remains strong demand. So I guess the question really is are you in fact a business owner who is ready to exit his or her business if the opportunity arose? Because those opportunities seem to be coming fast and furious. There's still a lot of activity, and our podcast and our information that we're going to share today is hopefully going to help you get prepared in that direction. My company, the NYBB Group, which I founded 20 years ago, and we have a group called the Exit Strategy Lab, works with business owners on exit and succession planning, a path toward selling or exiting their most valuable asset, typically, which is their family-owned business. Statistically, they say about 80% of most folks' wealth is kind of trapped in their business. So we're trying to bring you folks who understand the mentality of the family-owned business and can help you perhaps maximize the value of that business, or perhaps look at a way to grow that business. So what I have really, and I'm excited about the fact that I have my good friend, fellow CPA, and really someone who's been in the chief financial officer seat, the CEO seat for many companies, helps them in that direction, my friend Dominick Bencivenga. Dominick, welcome to the show. I'm glad you could be here today.
I'm happy to be here.
And Dominick's group is called the A-Team Consulting Firm. And what I'd like to do is give Dominick, I'm going to give you a chance, give a little background in terms of how you got started. Maybe not many years ago, right? But just a little backdrop, because I really feel I brought to the show some of the highest and best qualified folks, people who've been down the road, and I feel you're one of those folks. So I appreciate you being here, and just give us a little background where you started and kind of what your focus is now.
Sure. Thank you for the opportunity. So the A-Team Consulting provides outsourced accounting services, anything from basic bookkeeping all the way to CFO. The CFO role is the one I played in, and I've been doing it for 26 years. The best way to look at it is I got kind of bored and burnt out working for Citibank for 12 years, was in a branch manager role in a local branch, love working with my business customers, and came up with the idea of I'm going to go out and hang a shingle as a consultant. And after a few years, it morphed into this thing of being an outsourced CFO. And it has been a wild ride. I've seen countless number of clients, some who've made it really big and some who've made big mistakes. When you talk about that value, sometimes you could be somewhere mid-year in your business and maybe in your 50s and think, I've got this booked into my value, I'm going to sell my business. You can make a mistake the last 3 years in your business, and you've seen it, I've seen it. You've lost a lot of that value.
Absolutely. And what I love about the A-Team is they really help owners, and I think you guys and your partners and the folks I've met help them run their business more efficiently. And right. You have great expertise, I know, on the technology side, even help folks on the recruiting side, maybe some project management or project consulting. And of course, there are a lot of companies that really don't have a CFO, or perhaps have someone who's morphed into that position who perhaps doesn't have the requisite experience as a business is growing. And I believe they really need someone like what you guys do. And one other thing I want to tell the audience is Dominick and I think we have kind of the same mindset. We have the focus, and we've known each other for some time. We're looking to really assist those business owners and help them improve their business. So, Dominick, why don't you just go over what you think are some of the biggest issues that you see in those businesses that you come across today, and remembering that we both service, I would call it, lower middle market businesses, and you can kind of talk about the marketplace that you look to serve, and talk a little bit, especially about processes and strategies, but things that you see, issues that are kind of the biggest looming problems for folks that need to be corrected in order for them to really kind of get their business right-sized?
I think one of the best ways to do that is contrast the clients I've seen have really gone ahead and grown and others who just aspire to grow. So the ones who aspire to grow just keep talking about it. And I'm 5 million, I want to be 20, but they don't do anything about it. They wind up going through a lot of motions, and those motions get them nowhere, and they're like a little hamster on a wheel. The ones that get very intentional about their growth are starting to put the plans in place. So they're thinking ahead 5 years or 10 years. And I want to be a $50 million company. I'm only 5. And how I'm going to get there, and how am I going to get there? And if I'm going out 10 years, 5 years, 3 years. I never look out past 3 years when we get really detailed in planning, but we start working with them and giving those plans. And it works its way all the way back to the current quarter. So what do I got to do in the next quarter and the next quarter? And then we start looking at what are the things where we add that value is helping someone who wants to start planning their organization like that. And it really is wonderful when we come into a team that's got a really strong controller who usually doesn't have that mindset to help do the planning and strategic thinking and get to the next level, but they're simply in the place of doing all the accounting really well. So I love working with them. They're not bringing what I bring, right? They're lacking that, but they really got very good technical skills. So I can rely on the numbers and I can rely on what I see. As we know, that's not every controller we work with.
Do you think that the people, I mean, do they not plan because some can't see the forest through the trees? Do you think they're just so obsessed with the everyday situation in the business? I mean, I'm sure it's not that they don't have a dream and a goal and don't realize, and they think that the business can be 3 or 4 times what it is. Is there a mindset that we're facing here?
Yes. I think, first of all, the biggest issue is you're in the middle of your business. So you're not working on your business, you're working in your business. And if you're a CEO of a $5 million plus company and you don't have people doing all your day-to-day work for you, and you're absolutely needed to make the payroll, to approve the bills, to make sure that, all of the things happen in your business, you've got your challenge right there. But if you can get above that, now what that normally takes is the cash flow to be able to afford an extra person or 2 on your management team. That's where I see the lack of it. It's like, you've got to put a management team in place. You've got to build out a second level, allow you to step into a CEO role. Don't be the COO any longer, or president. And now you could work with the CFO and ideally even a coach, because I think business coaches are fabulous.
I agree.
They bring the discipline. So what I see that the people who go through this get discipline and accountability from a business coach who you're paying quite a bit of money for, so you want to listen to. And now you follow along their process and procedures. You build out your management team, and then your management team takes this ride with you. You're not doing it yourself if you're Mr. or Mrs. CEO. You've got to do it with your team.
Interestingly enough, as we go through, we do a lot of transaction work, and the buyers a lot of times are investors or private equity firms. And the number one question is, what does the management team look like?
Yep.
And the worst thing we could say is the management team is the owner, right? Or the management team is relatively weak, because oftentimes the buyer wants the management team to kind of pick up the anvil and kind of run the business. And it's amazing how lack of a management team or lack of a quality management team really devalues the business. Do you think the obstacles that people, I mean, let's say, why won't they invest in a management team? Is it just short-sightedness, or, I mean, what would you think?
I think there's a number of reasons, but before we go to that, I want to bring up, if you think about the topic we're talking about, the exit of your business, you've been in it for 20, 30, 40 years, you're going to want to be out of it. You want that firm to come in and buy it. When that business runs itself without you, you're most valuable. Your business has its greatest value. I think a couple of reasons. One is pride or ego, right? Just, hey, I can do it. I can do it all. I've always done it all. And the second is, it takes a certain kind of leader. You've got to sort of learn it. I think they're all born leaders, but I think you could also learn to be a better leader. There's no doubt about it. But you got to read the right books, meet the right kinds of people, be coached by the right kinds of people. Derek Jeter behind you, he had an innate talent, but he was also coached really well, right? Starting with his father.
Absolutely.
he got coached really well to become the star he became. And I think a CEO can go there, but you got to step out and say, this business is not about me. I'm creating something that's more than me. And when you do that, first of all, you'll be more successful, but you're also creating more value in your business. You're adding value to anybody who's looking at you, whether it's be a strategic purchaser, a hedge fund, private equity fund, it doesn't matter.
That's a great point, and it's interesting because we find when we're dealing with first, even second generation businesses, the first generation did it all, right? They started from scratch, they did it all. Sometimes the second generation, the only model they found is the previous generation who did it all, and they feel like they have to do it all. So somebody really has to have perspective in terms of what they are. And then I think a lot of it's about goal planning too, in terms of knowing where you want to be and what you want to be and who you want to appeal to. I think that's important. So I wanted to talk a little bit about the real readiness process in being sold.
Okay.
You discuss this with business owners on a regular basis, and what would you define as readiness? And what are some of the messages that you provide to those folks? What obstacles do you see?
So you and I have talked about this. The first thing I tell a client is you should always be ready to sell your business. I don't care if you're 20 years down the road. If you do all the things right today, when the time comes. So, and it even goes down to just corporate governance, right? You have all the right boxes checked when their lawyer talks to your lawyer to be able to say it. And if you don't have that ready, but you already got a seller, you now delayed your selling. So I just say, just make sure you've got the processes in place, it's documented. And we talked about the CEO or owner doing it all, but sometimes it's the controller who does it all, or the office manager. There's no process at all. I mean, I've come into situations and we've been brought in, and Susie's been doing the work for 30 years and it's never been documented. And Susie's done a great job, and she has been Gal Friday to the CEO, everything you ever can ask for, but no one else in the world knew it. So you put yourself at great risk. What happens if the proverbial bus hits this employee on the way into work?
Yeah.
You're in a bad place, and we're often called in to document that stuff and put some procedures in place. So I think having a lot of documented procedures, I think having a really good sales team that is driving it, and it's just not the owner driving sales or the CEO. It's got to be driven by a whole team of people. And then your good governance. If you're always thinking about adding value to my business, not just how much money I'm going to make this year, what my revenue is going to be, what's the salary in my pocket, am I adding value? Way back to the beginning, Anthony, when you said 80% of value of some CEOs' personal wealth is in their business. Yeah. Well, how do I increase that every day? I look at my stock market and I look at my retirement plan and see how that number's going up. But what about the valuation of my business? And it's tough because you're not going to pay for a valuation study every year, right?
No.
But
yeah. Well, it's interesting when you say about exiting, and people ask us all the time, when should I start the exit planning? I go, you should start it when you're thinking about buying or starting the business. And they look at me like I'm crazy. Yeah. And I give them some instances where there are a lot of folks who are buyers out there, and they're knocking on every door. They're looking and they're saying, hey, I'd like to buy your company. And they go, my company? And they go, I'm not really ready to sell my company. And the fact of the matter is, some people are very well invested in their company to the point where they probably can't see themselves without the company. Yep. Others really look at it as one of their assets. And if they can maximize that asset, they could sell. And we've had a lot of instances of being hired, and I'm sure you have too, where people say, hey, somebody's looking to buy my company. I don't even know where to start.
Yep.
But I like to start, looking at it from a standpoint of what you see from a financial statement standpoint. Because we have so many folks who, when they're looking about exiting, they don't realize the buyers tend to be a little more sophisticated than some of the family-owned businesses or the private held companies. And they're looking at financial statements, and some people have them, some people don't have them. So what do you see out there? What do you recommend, especially, take a company that's a $15 or $20 million company. They could see a pretty large exit, but the buyer may be a pretty big company.
The first thing to recognize is a tax return, your corporate tax return, doesn't tell the whole story. It's done to present to the IRS or the state what you are going to pay on taxes. And there are things you can do in there that are going to affect the way it looks. And it's generally going to bring down the net income. So having something outside of that in the forms of financial statements, even if they're internally prepared by your accounting team, makes a difference. I have a couple of clients where we regularly look at what is this business really valued at on a net income basis when we back out the owner's expenses, the things the owner runs through the business, the owner's salary. If it's inflated, they're paying them $500,000 a year. A replacement is really 300. Add those things in, and instead of making 600,000 a year, you're making 850. That's how you're going to evaluate it when we bring it to New York Business Brokerage Group. We're going to tell them we've got a business that's generating that kind of cash flow, because you won't have this owner anymore. You won't have these expenses for their cars and their meals, or whatever else they put through the business. So that makes a difference. And those are the ways we start to look at financial statements. So we can always know what's the real number we're looking at in profit, not the accountant's, who his job is to reduce taxes for you. So he wants to bring that down. So I think it's the first step, the internal. The second step is just going to a review statement, getting your accountant a little bit more involved in your business. First of all, if they've already done a review, when they come to do an audit, that you're one step up, right? You got a little bit more work. They know your business a little better. Accountants who do review statements know their business a lot better than the ones who just do tax returns. And the last thing is, if you can get an audit and you can afford an audit and you're like in the 10 million plus range of revenue, there's a lot of benefits for doing it. And it really is a good checks and balance on your team, because an auditor is going to find things. That's what they're trying to do, and tell you, you don't have a problem now, but I could see these 3 loopholes that are open to risk. And let's talk about that risk and how we could put internal controls in place.
It's interesting. We talk about folks investing in their business. They think of the investment in their business as hard assets. They think of it as equipment. They think of it as personnel. We say really invest in your business on a financial side, so that you do have the requisite information you need. Now, the other thing we find, Dominic, that most buyers really look at on a regular basis are even month by month, trailing 12-month type of statements. You just talk a little bit about that, what people look for when they're looking at that trailing 12 months. And I think the average small business, sometimes if they've never gone to the market to borrow money, sometimes they don't have financial statements, right? They only have tax returns. They never had to pay an accountant to prepare financial statements. When we find we get involved in a transaction and somebody wants to sell their company, not only do they want financial statements, they want quarterly, but sometimes they want month by month or trailing 12 months. Can you talk about what the value is there and what they're looking for?
Sure. So if you just take the example of 2 businesses, they're both earning $5 million in the annual number, and they're in the same industry, but one of them is pretty much of a straight line. They got there by pretty much the same. You take it divided by 12 and you get the numbers. But the other one had a really great first couple of quarters, and it's trailing downward in the 3rd and 4th quarter. What those potential buyers are looking at is, what's the trend in this business? Are we seeing these 2 $5 million companies are not alike? We're trying to evaluate who to buy in this industry, but this one's starting to lose market share or lose revenue. And what's going on here? The other way to also look at it is, sometimes I had an $8 million year, but I look at it and I can isolate one month where it blipped up, and there's $2 million more in that month than any other month. Now, you can again ask questions about that. Why did that happen? Is it recurring? If it's non-recurring, I'm going to back it out. I can't count that in your EBITDA number. I'm going to pay you on, because you got to. Sometimes it's not even the money you saw. Sometimes it's an accounting hit. During the whole PPP loan thing, and the accounting for it was very different on tax returns, but you were generally told by accountants, report it as other income, right? Mm-hmm. Just call it other income. You're writing the loan off. It's been forgiven. Proper accounting treatment. But now you go and look at that on your annual basis in your financial statements. There's a blip there for your loan that's non-recurring. It's a pure financial accounting transaction. Nobody's going to pay you any dollars on that. It's got to be backed out. So when you dig into these numbers and do analysis, and what I like to do is, knowing the people who you work with and you keep referring to as the strategic buyers or the buyers, knowing what they're going to look for, I want to be able to prepare that for my client in advance of that. And if I'm always looking at that anyway for my business, and we're using it on a regular basis, When we get ready to sell, now we're able to just present it. We know those numbers. And one of the worst things I see is if especially if I'm in my seat of doing what I'm doing, I've never done a spreadsheet like that, and I'm being asked to present that, and all I'm thinking about is getting it done. I never have much time to think about it. All my job is to get it out the door. And now my feet are backwards because I'm leaning backwards, I'm falling backwards as they're bombarding questions at me. You want to know what you're sending to them and what questions are going to come up before they come up.
And your point is really spot on, because during COVID, I mean, obviously there were a lot of changes during COVID. So when you look at the trends and you look at the gross profit percentage, we had one situation where they didn't really know where to book the PPP income. So they booked it as an offset to payroll. Okay. And we found the PPP money all over the place. I got to tell you, because there was no guidance and nobody knows. So we're looking at the spreadsheet and we're saying, gee, in March of 2021, you had negative payroll. How can that be? If we didn't really have a month-to-month evaluation, I mean, maybe it would have definitely come out at the end, I suppose, but at least we're able to see some glaring errors. The other thing we find people need the trailing 12 months for is they're really in search of what they think the working capital would be. And the working capital computation is always subject to some scrutiny, let's say, and some negotiation, let's call it. But I think the trailing 12 months and the month-by-month evaluation, I got to tell you, when the business owners look at the month-by-month, if they actually look at it, they're surprised a lot of times.
So when I have the client who is very receptive to doing it the way we'd like to do it, which doesn't happen all the time, most of the time, a 13-week cash flow, rolling cash flow is a must. Updated weekly in some businesses. Some businesses I can update it monthly. But when I already have that in place, that working capital discussion is very easy. I'm already knowing that. So another factor, we're talking about having someone in the CFO seat, whether it's fractional or full-time, it doesn't matter. Those dialogues with your buyers or strategic buyers aren't about the business and the strategy and the sales tactics and where you sit, because those will happen at a different level. But they're going to send analysts in, and those analysts are going to want to have finance-to-finance discussions. And when someone is having a reasonable discussion with them at a high level, you're coming across in your business in a far more favorable light than somebody just saying, I don't know what that means. I can't help you with that. That puts a few marks in your head as the buyer saying, I'm going to hire Jimmy now to do this work. He's going to be part of this company. Do I want to have him? Or we've got to replace Jimmy as soon as we own this company.
Yeah, and I find even with buyers, sometimes you only have one chance to really make a good impression. It's interesting. So on the CFO side, I mean, is there a level of business where somebody would really feel like they need one? Is it dollar? Is it based on profit? Is it based on revenue? Is it based just on help, employees? I mean, how would somebody know? Hey, I really need somebody to fill that CFO seat.
It's a good question. It's not based on any of those things. So I can give you a $10 million company absolutely needs to bring in the CFO, and a $50 million company. And a lot of it's the sophistication of the business and complexity. So if there's a lot of moving parts and there's just a lot of things you're doing, because as I said in the beginning, you've hired a coach, you're intentional about growth, you're putting together strategic plans, you're doing a 13-week rolling forecast. Those things all would then fall into the CFO's seat, and you need someone to do that. And typically, maybe your controller can do it, but they're typically so busy they don't have time to do it. So it's usually about, I'm going to start to add the discipline of these planning and strategic things involved, and working with the coach, being intentional about my growth, and looking at a bunch of financial tools that only the CFO can do for you.
And I would really like to have somebody in that seat who has kind of been there before. Oftentimes maybe the controller is great at what he or she does, but has not prepared those reports and doesn't understand what needs to be done. To me, having somebody like yourself who knows what the output should look like, not in a perfect world, but typically what it should look like, it makes a lot of sense, because now they have a template that they can follow. So if they do, say you end up there as their fractional CFO, and then ultimately to go to a full-time CFO, they'll have all the tools in their tool chest, so to speak, that you provided them for. I guess you kind of get them started in that direction. And some people could retain somebody on a fractional basis, right? On a regular basis for a long term, right?
Right. So we get hired when all those things are needed in your business, but when you really look at it, it's not quite yet the 35 to 55 hour a week job. It's a 10-hour job. It's 15 hours. I guess in my largest client, I actually are doing maybe about 20 hours a week.
Right.
But they are pushing, the point where they might need a full-time person. But that's when we got to get pulled in.
And some of them may just load different functions on your shoulders because now you know the organization, right? You work yourself into a more full-time position. Maybe that's not always what you want to do.
Yeah. When you get into a CFO role, depending upon the organization, sometimes you handle payroll and HR. Sometimes you're handling operational types of issues like offices, leases, rents. I've been involved with legal. The owner does talk with the lawyer about the big time things, but the lawyer and I have been through every step of a lawsuit and the documents requested. I've also been involved on the M&A side. Sometimes my clients have been looking to be the purchaser. And there's a whole letter of things that we have to look at to make sure we're going to do that. So
you're right. And we do a lot of work on the buy side, and we say, look, you have to be ready, not just financially. You have to be ready. You have to be ready with the right personnel. And so a lot of times people aren't. One other thing I wanted to ask you, I know the A team, they pretty high on the technology scale, right? You do a lot of work on the technology side. Maybe you could talk about that. And I see part of your offering too, you do some recruiting. So for the audience, it may be useful to know what those two specialties are and really how it probably can help their business.
Sure. I'll take the simpler one first. On the recruiting side, if we've been in the job for 3-5 years and I'm your part-time CFO and you've outgrown me, I know the job better than anybody. And I've got a lot of institutional knowledge too. So it's best to have a transition that's going to work through and with me. So for my team to help you recruit that person, replace me, works out wonderfully. We also, though, have gone into a prospective client call, and in that call, we've looked at it, and the client thinks they want a fractional, and we're like, you don't need a fractional. You don't need a full-time CFO. You need a full-time controller. So we've then gone ahead and helped people recruit for that position. On the technology side, we're just firm believers in that you've got to use the tools that are out there. They're going to make it more efficient and effective. So that could be as simple on the accounts payable side of using bill.com. One repository, all your documentation is there, one payment source. It could be using Expensify or Concur to do expense management reports for your teams. But it also could mean, hey, I've outgrown QuickBooks. What do I do next? Where do I go? What are my options? And there are very major, big gaps to the next level, but you don't necessarily have to do that. There are places you can go with there. So we built a team of people who are very, very technology savvy, but also know accounting and controller work and CFO. And we help people assess where they need to go with these things.
And I talk about technology because I find it to be, number one, confusing for a lot of folks. They don't really know where to go. Second of all, it tends to be a pretty big expense, right? It could be a big line item. And if you're picking, for instance, the wrong accounting software, or you're picking the wrong technology package, you could be in two problems, right? One, you spent all the money, and two, you don't have the solution. So
and also, by their nature, people who are controllers or bookkeepers or people who are handling your accounting, just like the status quo. It's working. I just want to keep it going. So they're not necessarily, if they need 3 people to get it done, going to tell you, you know what, I can get down to a person. We can cut a person out of here by doing this project and bring this in. But that's what you want to hear as the owner. And if you're not hearing it from them, where else are you going to hear it from? So sometimes we have to just educate an owner on, you can get things done a whole lot efficiently, and your team isn't bringing this to you. But by nature, they're not going to.
We know in our world, I was maybe not resistant, but I was from old school where we had a lot of folders and a lot of paper. So we've kind of gone paperless with a CRM. And I'll tell you, you do get used to working that way, and it does save you time and money. And perhaps it also saves you help because, you don't need somebody filing things. You have a good system online. So, and it takes a little
sometimes you get more
training.
Sometimes you get more accuracy. You won't have the input errors that we've all seen.
So we're coming near the end. If you have, what I'd like to know is, you have a quick success story that you kind of comes to mind, maybe somebody you're working on or you just completed the engagement that you can kind of share in a minute or two?
Yeah, I'll talk to the client I've been with the longest time. So I started my business 26 years ago, but in 2013, I merged it with my partner, Ted, who you know. We brought it into the A team. At that time, he had to replace somebody who was in a controller CFO role at this client, who wasn't getting along with the owner. It just wasn't working. So I step in, meet with the people. First time I was ever on a video call with anybody. They used Google Video at the time. So I had the meeting with them. And we've grown that company together from a $5 million company to a $35 million company. We now have a new he stepped out, the owner, founder. He stepped out. He has brought in a president to run his company for all these years, who's his main day-to-day person. He's now gone through the second person. I have actively been involved with that entire process of recruiting that person. And you know, they would love to have me on a full-time basis. We've talked about it, and I'm just like, it's not something I want to do, but it's really great to hear. But I've become so embedded in that organization that even though I'm a consultant, I am an active member of their management team. I sit in a seat and I go to management team meetings. So we have quarterly planning meetings. We have monthly, we call it a senior leadership team meeting. I am on the chart. I'm on the org chart. I'm in those meetings with the valuable voice. To me, that's when we do what we do best. Sometimes I just advise the owner on the side, and that works too. But when we get inculcated into the business and we're really in the middle of it all, just like the director of marketing and the director of technology, we could do that even though we're on a fractional basis.
I got to tell you, and you know, people really out there need to know that that takes more than just financial knowledge, right? That takes a high degree of people skills, which I believe you have, and I think to grow an organization, you know, for somebody to go from 5 to 35, that's not just a big leap. That's amazing, quite frankly, because you know, there's a lot of moving parts there. It's not just about financial investment. It's about people investment. It's about really learning to take instruction. It's about all of the above. And you know, you rarely, quite frankly, you rarely see that. So congratulations on that. So we're just about at the end of our show, Dominick. So what I'd like to do is let people know what's a good way to get in touch with you. Okay, and you know what kind of should they email you? Should they call you? Maybe you can just give us that information.
Sure. First of all, anybody out there, I would make the offer for 2 free hours of giving you anything in terms of sit down with you and talk to you about your business. Love to talk to new business owners. Love to go through this process. So if you're facing a problem and you want to just create a video meeting, or if you're local, I'll meet with you. I'm in the New York City metro area. You could reach me at 631-278-0207. That's my cell. Or the email is dbencivenga, my last name, at ateamconsulting.com. And the website, of course, is www.ateamconsulting.com.
Sure. And anybody who needs to get in touch with Dominick can kind of go through me as well. But I appreciate that. And just in conclusion, look, our goal here, and I wanted to thank Dominick for a great, very interesting 30 minutes of just information that I think is invaluable to the people, the marketplace that we're trying to attract here. And remember, our goal is to provide you, our privately held business, our family-owned businesses, with information that's going to help you prepare for your exit. I'd like to know what topics you'd love for us to cover going forward, perhaps in the next year. We have this year pretty much planned out, but I'd love to know what topics would really make sense to you. And remember, we have a readiness assessment that we're offering to everybody in the marketplace at no charge. It's 22 pretty simple questions, but gives you a very interesting report that we can review with you that'll show where some of your pluses and minuses are in terms of readiness, looking at it from an overall value standpoint. And I think you really have to know where you are so you can kind of determine where you want to go. And also, it gives you a great picture. And even talking with Dominick for 2 hours or an hour, it'll give you a picture of what the marketplace looks at your business. It looks what your business looks like in the marketplace. You need a third-party objective opinion. Don't allow it to be just your own internal people or your own self, because you'd be surprised. You may be stronger than you think. You may be weaker than you think. But
I think that's a great point, Anthony. And I think both of our firms do that and do it well. but it doesn't matter if it's Anthony or Dominic. If you could just find the right professionals to give you that opinion, and sometimes your accountant is even a little too close.
Yeah, and look, we need to know, because as I say, it's funny, we joke. I used to joke, and I say you don't want to end up at the end of your business career with what we call a firm grasp on an empty bag. And I think there's a you work so hard in your family-owned business. Don't let that happen to you, Dominic. Thanks a lot, everyone. Have a great day, and we'll see you next time.
Bye now.